Okay, now in the daily time frame, you can clearly see that my resistance is over here. Like you can see these candles closing right at resistance. And then if you look left, now these moves, they must have been due to some news or like during high volatility times, or maybe there was something fundamentally happening in the background which caused these moves to go through the resistance. Because if you look way past over here, there's resistance here, there's resistance here, over here, over here, over here, 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 and here, right? So it's really important to actually look left to see where resistance was actually respected or support was respected, right? So now I don't feel comfortable with having a support at this point, so I'm just going to move it down a little bit where I feel more comfortable, where I can see that there are more candles being respected, right? So I'm going to place it right over here because, yeah, right over here will be fine. Now here you can see this acted as support, resistance. There was a break, there was support, 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 resistance, a break. And if I look left, oh, look at this. There's another support. There's resistance and so on, right? So now for trading, for a swing trade, you want to have like a big zone, right? For a swing trade. Because if you look at the price over here, it's 0.99. And if you go down, it's 0.97, right? So this is a 2,000 pip range. Now that's a big range, right? So what I'm trying to do is we're trying to do a swing trade, and we're trying to aim probably down to over here, right? So now every candle, it takes a day for every candle to be formed, right? So from this point, what we're going to do is we're going to go deeper into the 4-hour time frame, or actually, I'm going to draw another resistance zone or support on the daily time frame, which can be broken down into the 4-hour. And so I guess this will be a nice area over here, right over here. I see I'm getting these candles in, this candle over here, these candles, these little indecision candles. And if you look left, right, you can see that this support resistance, now this was resistance in the past. The resistance becomes support on this candle. Support becomes more support here. Resistance for this candle, support, support, resistance, and so on, right? So from here, I'm going to go into my 4-hour time frame. I'm sorry, my phone is going off in the background, no matter why. Okay, we can go over here. Shit, where'd it go? Uh-oh, not good. 1 sec here, let me see. This is, oh, there we are. There we go. 4-hour. Okay, perfect. So here we are. This is the 4-hour time frame. And I'm just gonna kind of zoom in over here. Okay, so here you can see now. One thing that I like to draw is zones, right? So as you can see, this was a resistance zone, right? Like most of the candles, they respected this resistance zone. And then there were some candles which broke out of this zone, right? I call this as a rejection zone. So what I like to do over here is I like to draw a rectangle. So I'm going to draw a rectangle for this rejection zone, and 2 over here. There we go. Right, so this is our rejection zone. Now, this helps us in a way. Now, let's say if let's say we didn't have any information we didn't have this information here, right? We only had information till here, right? So what we're going to do is, so now we see the candles breaking into this zone. We look left and we see that the last time the candle came into this zone was like long time ago, right? Like you can't even, like it was like a long time ago. Like there are less odds that the price is going to come into this zone again, right? So comfortably, you can take a sell over here. Now, once you take a sell over here, you want to make sure your stop loss is tight, right? Now, most people say like that when you take swing trades, you need to have a wide stop loss. So the only reason you will have a wide stop loss is, let's say if you took a trade over here and you weren't patient enough for the price to reach this resistance zone, then you're going to have your stop loss right around over here, right? This is going to be I think it's going to be around 450 pip stop loss. Now this is going to be a wide stop loss, right? So if you took a sell over here, you're riding the price all the way up over here, and then you're riding all the way down, right? So think about it. You're sitting in negative all this time, and then you're riding it down in positives, right? So that's why I say for swing trades, you need to wait. You need to wait for the price to get to a resistance zone. It always will. It always will, right? Now, if you see over here, let's look at this candle here, right? Now, this candle turned bearish. Now, this is a trigger. Some people might say, okay, now, you know, we had a shooting star, or is this a hanging man? I'm not really sure, but this candle generally, like it says, is going to be a reversal, right? So there we go. There was a bearish candle. People got in. They took people got in and they placed their stop loss around over here, right? What happened? They went in profits, and then boom, it went up to the resistance zone where it had to go anyway, right? So that's why I say just wait till the price goes up the hill. Now, once the price breaks into the resistance zone, let's say you took a sell over here, right? Then you can put your stop loss above the rejection zone, right? Because you know, okay, this is my resistance, so it broke through resistance, so I'm going to take a stop loss over here. Now, let's say if we had no idea where the rejection zone was, right? So you took a sell over here, and then you thought, okay, like, you know what, the price is at 0.99064, so I'm going to place my stop loss 200 pips above my entry price. So 200 pips would be 264 right over here, right? So this is a very good stop loss. This is a very tight stop loss, just like 200 pips, like 200 micro pips or 20 standard pips, right? So with a 20 standard pip stop loss, you're aiming for 2,000 pips or like 200 standard pips. That's a pretty good risk reward. Like your risk reward at this would be, I would say, like 1 to 10. 1 to 10 is your risk reward for this trade. So now, let's say the price was here and we didn't have this information, right? So you wrote the price all the way down, you wrote it down, and then there was a pullback, right? Pullbacks always happen, always happen. Like if you're in a trend, there will be a pullback. Let's say you were in an uptrend over here, right? Price went up, it pulled down, it went up again, right? It pulled down, and then it rallied up again, right? This is how it works. The price always, the market will not go in one direction consistently. It will always move in the opposite one for a little while, and then it will continue its trend. Same thing here, which is what I believe it's going to do now, because this is a strong rejection zone. So price, let's move this rectangle here. Right, so the price came down, it kept coming down, it came down, it came down here almost, it came down here almost 400 pips, 40 standard pips, and then it rallied back up, right? It rallied back up, but it didn't go through this rejection zone, right? Because the stop loss is right around here, so it never went to this point. And then it started coming all the way down. So let's move this rectangle. Okay, and then now you see these long wicks. These wicks are actually now, I call these wicks as market maker moves, right? I call these wicks as market maker moves because there are some traders out there who would be riding this position. As they go in profits, they will continue to put the stop loss in profits as well, right? So once you have your stop loss in profits, you see this, market goes back up, stops you out, right? And then continues to go down, goes back up, stops you out. That's why you need to have the stop loss way up over here, right? Outside the rejection zone. And then the market continues its way all the way down, right? So now at this point, what we have is we have our stop. I'm just going to draw the stop loss over here. It was 2, 6, 4. So our stop loss is over here, right? So I'm going to draw my stop loss over here. This is where it is. And perfect. So now, take profit points. Now, we are in a running trade right now. Our take profit point would be, now, from the 4 hour, what you want to do is you want to draw out your mini support and resistance zones. Now, we're working off a daily time frame, right? So from a daily time frame perspective, you're looking at 4 hour chart for your entries. So you want to draw your support and resistance on 4 hour time frame. So very first support I see is over here. Let's give this another color. Actually, I'm going to give this a red color. The next support zone I see is over here. Okay. And the next one I see would be around over here. Over here, right? So this, because you see this wick over here, you see this dip over here. Okay, so now these are the points that we're targeting. Our first take profit was this zone over here. We hit this profit point, price rallied back up. Now it's continued to go down. Now I believe that it will retest this zone. First retest was this point here on the 13th October. And now the second one will probably break through this zone and then continue all the way down, right? Because this week we're expecting the US dollar to weaken a bit. So that's why we're expecting the price to go all the way down to this zone. And then ultimately it should reach this area as well, right? So now the way I use my take profit points is through Fibonacci levels. Now, if you guys don't know what Fibonacci retracements are, don't really worry about it. I'm going to show this to you right now. What I do is you draw out your Fibonacci's. Swing high to swing low. There we go. Now, you can see that Fibonacci levels are basically retracement levels which fall on support and resistance zones. What's going on with Fibonacci? Okay, so this is it. So basically now the price is trending at this point. If you can see these colored lines, I think I drew it too big actually. I'm going to shorten it up a bit. I'm going to bring it way over there. Way over here. Go back into 4 hour. Awesome, perfect. Okay, now if you guys can see now, I drew my Fibonacci from swing high to swing low. Low point, it was the lowest point where the graph was. Now here you can see the first retracement zone. Retracement zones are basically now the price was trending up, right? Price was trending up and now it's trending down. It's retracing from the bullish trend and it's retracing as a bearish trend, right? So the first retracement zone is 0.786. You can see this zone lies exactly at the support zone. The one after this is the 0.618. This almost lies at this support zone as well. And then if you go even further, this is 0.5 and 0.236, right? So I use Fibonacci's to actually give me a rough idea where my take profit points could be when I'm taking a swing trade. Okay, perfect. Gives me a really better idea. So now once price is trending down, I'm looking for previous structure levels, right? I'm looking for consolidation zones. Now I can see clearly this is my first consolidation zone right over here, because price, it went up, came down, went up again, so it kind of consolidated in this area, right? So I'm targeting this area as my main take profit point. So I'm going to wait for the price to come down to this zone over here. I think this is 0.98000. I think we gave this signal in trading notice. That's one of the trading signal things which Ruben has with Eunice. So this is going to be our first take profit point. And then I'm going to look at the very extreme take profit point, which could be around this area here, because this was another major consolidation zone right over here. So I'm going to be targeting these points here. Okay, so it's really, really simple. What you first do is you look at your weekly chart. You look at the weekly chart and you look to see that where price was at its highest, right? So this is the weekly chart, right? So you see that the price was highest at this point, so you draw your resistance line on the weekly, right? I always like to look at the biggest time frame, and then you look at the daily time frame. One day, you look at the daily time frame, and from the daily, you can see a better view of what was actually going on, right? Now, you can see over here that the price is at the very top, so you can see now the last time the price was at this point was on 27th July, right? So what are the odds that the price will breach this level? The odds are very, very thin, right? So that's why this will be a good swing trade, right? So you look at the daily and you see, okay, perfect, like, you know, the price came above this level, so I can probably take my sell over here and I can go about my day. Okay, perfect. And then you go into your 4-hour time frame to see what was actually going on in detail. Okay, let me adjust this chart. Perfect. So this is my 4-hour. 4-hour, I can comfortably say, okay, perfect, I can take a sell over here, and you took a sell, put your stop loss, and you know the trade is in motion. And then one good thing about swing trades is that you can just let the swings run. You can let the market do its thing, and like, you know, all you got to do is manage your trades. Like right now, if I'm going to sell over here, I'm going to bring my stop loss at break even or a little bit in profits. Right? Because there is less chance for the price to come back over here and retest this area, right? Even if it does, if it stops me out, so be it, right? You know, so be it. It stopped me out in profits. Like, you know, I'm not gonna cry over it. So now from this point onwards, I'm just gonna let the price do its thing. That's it for swing trades. I think the chat is active. If you guys want to ask me any questions here in the chat, feel free to do so. But I think this is the pair I'm looking at for this week, really. There was another pair we were looking at that was Australian, New Zealand, but it's already in a trade right now. So I'm just going to look for a pullback so I can take more positions. I'm going to let you guys all know when we do that. Okay, we have no questions so far. Yes, perfect. Perfect then, we're good to go. This is being recorded, so I'm going to have it up on YouTube. And awesome, I guess you guys, I think if you guys are wondering if you guys can take this trade right now or no, what I'm going to say is let's look at 1 hour and see what's going on over there. because I actually want to open up another position on this trade. Oh, the same question. When you have TP1 and TP2, how do you decide if you take TP1 or let it run? Well, what I like to do is I like to open up a position. Let's say if I have 2 lots running, right? If I have 2 lots running, and if it hits my first take profit, I'm going to close half of it. I'm going to close half of the position, and I'm going to let the rest of it run. That's how I'm going to make sure that, okay, like, you know, I have something running at the same time. Or I'm going to open 2 or 3 positions, and I'm going to let them run. And as one of it hits take profit, I'm going to close it, and then I'm going to let the other 2 positions run and do their thing. So now, if I look over here, what option do you use to close a position off in profits? A good question. Okay, yeah, I'm going to get to that in like a minute over here. Now, I think I'm going to enter a position over here. What I'm going to do is I'm going to draw a support. This seems like a good support over here. So I'm going to wait for price to come to this level, and then I'm going to take another sell. Okay, so getting back to the point, how do you take positions? Let's do that right now. Okay. Okay, so I'm just gonna have to share another screen over here. How do you change? Oh, new share. Okay, perfect. So if you guys can see over here, I took a sell here on my live account. So it's running in profit right now. Can you guys see the screen? Is MetaTrader 4 screen perfect? Okay, perfect. Awesome. Okay. So the way you do that is, now let's say if I reached my take profit at 1 pip, right? So what you want to do is you want to double click your sizing, double click it, and then you choose the lot you want to close, right? So at this point, I'm going to close at 0.01. So I'm going to close half of my position, right? I really don't want to close it in losses. So what I'm going to do is I'm just going to hit close by market. Actually, you know what, fuck it. I'm just going to close it by market, and just to show you guys. So you see right here, this is 0.02. So if I close it by market over here, see, it's closed, and all I have left is 0.01 running. Make sense? Easy enough, right? Really simple. That's how you close a part of your positions. And I took a loss over here, a few cents. Perfect. Okay. So I think in 2 or 3 days, we're going to do another webinar on another currency, or we're just going to do an update on USDCHF and see how it's running. Awesome. Thanks, guys. I'll see you next time.